Summer guys, welcome back to yet another episode of Market Structure Analysis. My name is James Pakion and you are watching Pakion FX. Thank you again for tuning to my video. We are still continuing with this series, Market Structure Analysis, and definitely we are going to break the market. It's pretty late. It's about 12 a.m. So currently the market is actually I'd say it's very dormant. It doesn't move much around these hours for us who are in GMT, rather UTC +3. So yeah, I remember last week when we made the last video on market structure analysis, we were actually looking at this candlestick pattern here, which had formed from a previous bull run. So once we saw this candlestick pattern here, which is actually a bearish, inverted bearish hammer, we knew that ideally the market was beginning to shift into a more bearish structure. So that's why we actually had anticipated to do plenty of sales around this area. And true to our word, the market actually respected our analysis, except it actually did move. We expected this candlestick pattern right here to maybe wick up to maybe around this point, but it didn't do that. It actually went quite high, and I'm sure it took out most people, but in case you had put your stop loss above this wick, then you should have been safe. So ideally that week that followed, we have actually noticed a very huge bullish momentum on the market, because as you can see, the market opened around this point. It tried to move downwards, but there was quite some bullish momentum still in play. So it went up, but unfortunately it didn't go in. It never broke past this level. Actually, it closed almost where it had started, and this is a very huge wick, which shows that indeed that the bearish market structure was in play. So this week has actually proved to us that the market has continued to go even more bearish. So as you can see here, this entire candlestick pattern has actually been formed today, because in the morning I think it was ranging around this area. Actually it was yesterday night, it was actually above this zone. So we actually were taken out on some trades. We'll probably attach a screenshot and you'll see, but I've actually also put it in my stories on Instagram, so just go and check it out. But as you can see, until yesterday night, this market structure hadn't broke below this. So all of this, the market today has moved really drastically. Let's just move to a lower time frame, the daily. I want to show you guys something. Yeah, so as you can see, this whole candlestick pattern has formed today. The market today has moved on, I think, over 300 pips from the last time I checked it out, because I remember when we were analyzing this market. So in our previous analysis, the previous video, we had drawn a sort of a flag pattern here, drawn something like that, something like this here, before actually this candlestick had formed. This daily had closed bearish. So in my opinion, I saw this, and what I had anticipated to do was, I thought it would, if it would have continued moving up, then we ideally would have taken a trade from here, put our stop loss just below that, and then match our take profit to these top wicks around here. And that was a very good risk reward of 1:4. So that is what I thought. I thought this was a sort of a bearish flag, and then we would witness a continuation. So I thought it would come back down, retest this place, maybe retest here, come back, and then continue moving upwards. But that is not what happened. So when I actually noticed that it had broken below this particular trend line below, I actually just removed this trend line, and I told myself, so now we have a sort of a descending. As you can see here, this trend line shows that the market is continuing to form lower highs. So once I saw this breakdown, this is what I anticipated. I anticipated the market would retest around this area and then continue to move even lower, and that is exactly what it did. Unfortunately, when it came around this area, I took a trade, but you see this huge stop loss hunt around this area, so I was taken out of most of my trades, but it is what it is. I ideally have the market analysis correct, so I'm still good with whatever I have. So this entire bearish candlestick has formed today, and it's because the market retested around this area, and as you can see, it continued to move lower. However, I can just show you what I saw before it actually formed this whole candlestick pattern, which I actually realized later on I should have just waited and just let the market play out before taking that trade. But when we lose, we learn. So let me just show you what happened today. So ideally, what I should have done is to take this trend line and draw it here, so before this whole thing had formed. And as you can see, this is our 50 moving average, so it actually confluenced with this trend line around this area. So when the market came and retested this 50 moving average and failed to break above it, we actually would have anticipated a sell to happen around this area. Also, let me just show you another confluence with our fibs. So I took that as my highest high, and at that point this had not formed, this entire thing had not formed, so this was my lowest low right around there. So as you can see clearly, if we put our Fibonacci right around that area, so if that was our highest high and this was our lowest low before this whole thing happened, ideally this area, remember we said in between 0.5 and 0.618 in a Fibonacci, we call that the golden zone. So we usually expect a lot of market movement, and as you can see, the 50 moving average has also corresponded with this trend line and with this particular Fibonacci level 0.618. So the moment you saw that this currency pair approached this particular Fibonacci level 0.618 and never broke above it, then ideally we would have expected a huge sell-off to happen around that area. And we usually say on the third touch of the trend line, we do expect a lot of market movement towards the direction of whichever side the trend line is. So this was our first touch, our second touch, and this was our third touch. So ideally after our third touch, we should have expected a lot of movement to the lower side, and as you can see, this market today has dropped drastically. Let me just show you how many pips we've moved today, from there all the way here. If you think I'm lying to you, this is 301 pips in one day. GBP JPY moved 301 pips in one day. That was a huge sell-off, and I actually felt really bad that I never had the opportunity to get into this trade, in as much as on the 5-minute time frame I had observed. Let me just show you what I had seen on the Fibonacci. It was a really beautiful candlestick, as you can see here. Let me just extend these Fibonacci's because they are quite far from where I am supposed to like see that move. So let's extend these Fibonacci's all the way to that place. I want to show you something really interesting. So let's go down back to the 5-minute chart, and then I want to show you something. Do you see this? Do you see this candlestick formation? It's a very beautiful candlestick formation. This was a given trade, and I was actually looking at the market while it was doing this, but I was still quite skeptical because I realized it was moving upwards, so I thought it wouldn't actually break above this. I actually thought it would break above this, so I was just waiting, and then I failed to get into the trade. But ideally, you see, it tested the 0.618, formed that beautiful bearish candlestick pattern, and then another confirmation right here, another engulfing right here, and then that it just continued to move down all the way. And once this actually crossed below the 50 and the 200 moving average, then that was a given. That trade was a given. That trade was a huge was going to be a huge sell off. So tomorrow we're actually expecting the, let me just delete all of this. Tomorrow, rather even today, it's because it's already past 12 a.m. So Friday we have the NFP, so we will keep watching what the market is doing, because right now, as you can see, it has started becoming more and more bullish. But maybe this might reverse, because tomorrow when the NFP is announced around 3:30 p.m. Local time, we don't know what might happen. So let's just keep checking and seeing how the market is going to behave. Anyway, that's been it for today's, or rather this week's, market structure analysis, and I hope you guys are actually getting information, or rather being helped by these videos. Also tune into my previous video. Actually, if you haven't watched it, go and watch it. Subscribe, remember to subscribe, like, share with your friends, and yeah, I'll see you guys in the next video.